WP Carey stock, ticker symbol WPC. This stock is down only 3.5% year to date, which is pretty good if you compare it to the overall market, which is down almost 17% year to date. WPC presented earnings on the 4th of November, where they beat on EPS and revenue. They also reported FFO of 1.36, beats by 10 cents. And investors love WPC stock because of the dividends, and I sure get why. Dividend yield of 5.4%, which is of course very attractive dividend yield. But does this also mean that WPC stock is a buy at current prices? Well, in this video I'm going to show you real quickly what WP Carey does. The most recent earnings, the historical returns, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does WPC do? WP Carey is a real estate investment trust, principally involved in the ownership of properties located in the US, Western Europe and Northern Europe. W. Carey's real estate portfolio is primarily comprised of single-tenant office, industrial, warehouse and retail facilities located around the world. If we dive in the most recent earnings report, we see that WPC has more than 1,400 properties and 391 tenants. The US represents 65% of their total portfolio, Europe 32% and other 3%. The weighted average lease term, or WALT, is at 10.9%, which is pretty good in my opinion. Occupancy rate is at 98.9% and also looking very good. The top 10 tenants represent 80% of the total ABR, which looks pretty good to me. It means they are very diversified, which is something that I like, of course. The self-storage segment has 84 properties and an occupancy rate of only 91.9%, so that's something to keep your eye on. If we zoom in on the property type, we see that 26%, the biggest segment, is focused on industrial. Warehouse is at 24% and office is at 18%. Retail is at 16% and self-storage is at 5%. In here we see the top 10 tenants again, and the biggest tenant only represents 2.9% of the total portfolio, so this comforts me a lot. In this graph we see the average lease term again, and it also looks good to me. 50% of the lease term expires after 2032, which is pretty common for these type of REITs. The historical occupancy rate looks very good to me. It always has been above 96%, which is pretty impressive. If we check the quarterly financial results, we see that the revenue for the 2022 third quarter is at 383 million, up 17.7% year over year. And we have an AFFO of $1.36 a share, which easily covers the dividends of $1.06, so this comforts me a lot, of course. The 2022 AFFO guidance raised and narrowed to be between 5.25 and 5.31 per diluted share, and quarterly dividend raised to $1.06 per share, and as I just said, it's covered very easily with the AFFO. Payout ratio is at 77%, which is pretty common for a REIT. I prefer payout ratio of 80% or lower with REITs. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. WPC is a 15.92 billion market cap company with a PE ratio of 32.5. But to be honest, PE ratio isn't the best way to value a REIT, so we are going to use the price to FFO to see its valuation. WPC has a price to FFO of 13.95, which could mean that they are undervalued. Later in this video I will show you my 3 price targets for WPC, so make sure to watch until the end. Revenue is at 1.4 billion, and in this graph we see that revenue went up in the long run, but has gone up and down quite a few times, so that's something to keep your eye on. Net income is at 489 million, which gives us a profit margin of 34.9%, which is pretty steady if we check the 5-year profit margin, so this is something that I like. EPS is going up and down quite a lot, which is very common for a REIT, so it doesn't worry me that much, so for now I'm okay with it. Price to free cash flow is also looking pretty good at 15. The average in the REIT industry is at 14, so it's pretty much the same. Analysts are expecting EPS to decrease a tiny bit in the coming years. And of course, that's something that I don't like. But since WPC is a REIT, it doesn't worry me that much. Revenue is expected to grow at low double digits, which is something that I really like. Return on assets is sitting at 4.7% and return on equity at 6.2%. Both are looking a bit low, but keep in mind that this is very common for a REIT. It's the same story with the return on invested capital. It's at 5.9%, which is pretty good for a REIT. On top of that, it's higher than the 5-year average of 5%. Current ratio is at only 0.18, so this looks good to me. Nothing special to mention here. A thing that I don't like is debt to cash ratio. Right now, total cash is at 188 million. Operating cash flow is at 1 billion and leverage free cash flow is at 800 million. I prefer a company who can pay down at least 33% of their total debt, which WPC can't do right now, since total debt is at 7.78 billion. But on the other hand, REITs tend to have a higher debt in general, so I'm not worried that much. Especially since free cash flow is growing at a nice and steady pace. So this looks really good to me. And to me it's very important that free cash flow is growing, since this is used to pay down debt, do acquisitions, buy back shares and all other things. And if we check the shares outstanding, we see something interesting. Usually you want this number to decrease, but REITs issue new shares to grow the business. And WPC is issuing also new shares, but not as much as other REITs. So this is something that I like because it makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is at 5.4%, which is pretty high and attracts a lot of investors. Annual payout is at $4.24 a share and the payout ratio displayed here isn't correct, since REITs use FFO to pay their dividends. Earlier in this video we saw the payout ratio is at 77%, which is pretty good in my opinion. The 5-year growth rate is at only 1%, but I don't mind that much since dividend yield is already at 5.4%. They grew the dividends for 8 years in a row, which is also pretty good. Overall a great looking scorecard, but how about the historical returns versus the S&P 500 and some competitors? I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. Next to that I decided to include Store Capital and Iron Mountain. On the 5-year chart we see a 45% return for WPC stock, which is the lowest in this list, and this is including dividends. The S&P 500 is at 68%, so you were better off owning the S&P 500 on the 5-year chart. Store Capital also underperformed the S&P 500 and IRM has beaten the S&P 500 by quite a margin. On the 1-year chart we see that the S&P 500 did the worst, with a minus 12% return. WPC is at 6.5% and IRM is again the big winner here with 16% return. On the 6-month chart it's pretty much the same story, except for the fact that Store Capital is the big winner here, with a 24% return. On the 1-month chart, Store Capital is nearly flat and WPC is slightly underperformed the S&P 500. IRM stock is again the big winner. Overall, WPC didn't do a very good job, but this could be just different in the future of course. So is WPC stock a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. Analysts were expecting low double-digit growth for the future, but I want to be a bit more conservative, so I'm filling in 7, 9 and 11%. Profit margin was pretty steady over a longer period of time, so for my low assumption I'm filling in 29%, for the mid assumption I'm filling in 32%, for the high assumption I'm filling in 35%. Free cash flow margin is 58, 61 and 64%, and the PE ratio is a complicated one, since this isn't a good metric to value a REIT. Nevertheless, I'm filling in 16, 17 and 18. And it's the same story with the price to cash flow. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, WPC stock is at $78. I hit analyze and we see a few green numbers. I'm not focusing on the multiple of earnings value since this isn't fair for a REIT. So if we check the discounted cash flow value, we see a low price target of $69, which is a 10 to 15% drop from the current stock price, a mid price target of $87, and a high price target of $109. To me, the mid to high price target is the most justified here. So if you believe these numbers, then WPC stock is a buy right now. My final conclusion on this stock is that I really like the business. It's very diversified and it's growing at a nice and steady pace. Dividends are looking great and the valuation seems also to be very attractive. I think the $87 to $109 price target is looking pretty good and I'm adding WPC stock to my buy and watch list. Right now it doesn't feel like the right moment since the market is going up and down quite a lot. I'm not a fan of timing the market, but it feels that the market, and this stock including, is going down again in the coming weeks. So whenever it drops to around $70, I think I will buy this stock. That gives me a higher margin of safety, which I prefer right now. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.